Welcome. I'm Catherine Magaña here with Rachel Ivanovich, Steve Wolff, and Greg Carroll. Actually, welcome back to Steve and Greg. They just got back from being off for a few weeks, so perhaps.
And I had like a treatment done on my face.
That is correct.
You know, so pre-cancer stuff, and it makes no sense to me that because I got sunburned all these years, that I go and I pretty much get sunburned again to fix it. Something is wrong with that.
And Greg, do you want to share where you were at?
Well, I just went to, clear my mind a little bit.
Yes.
A couple of weeks over in Europe, a week in Ireland, and a week in and about London, and for my 30th wedding anniversary.
Wow.
So
Congratulations.
Thank you. Yeah, we had a great time. The weather held out for 2 weeks in Ireland and London, only 1 day of rain.
Really?
Don't know how we did that, but
Fantastic.
Got very, very lucky.
You know, for your 40th, you may go on Elon Musk's trip to Mars.
That's a great idea.
It's a good goal to have.
I don't think you get to come back from that one.
All right, so today we're going to provide you some insights on the markets, investing, tax planning, and kind of the big headlines right now. We're still hearing about the government shutdown, but the big thing now is the IRS furlough with about half of the staff not going to work, which I don't think that you mentioned last time. It doesn't affect
the tax
return.
deadlines.
Yeah, it doesn't matter if they're working or not. We still have to pay tax, right?
Absolutely.
But I
Do
love the
they
IRS.
get the refunds out at their deadline?
That's a question.
Oh, okay, we got to pay, but they don't necessarily have to.
We'll see if we get our money back. Hopefully. Just kidding.
The government probably wouldn't shut down if they didn't know that they were going to get their pay anyway. So when this is over, they all get back pay. You know, to me, the senators and the representatives should not get paid anything ever if they shut down the government. I bet they wouldn't do it.
They voted. This is the 7th time today, so I don't know if they're going to. How long?
You mean
is it
to reopen it? Mm-hmm. Well, but the point is that there's no penalty
For them not
closing.
getting it done.
The only people who get hurt are people like the military, who they're not getting paid. Now, they eventually will get paid, but they don't have a lot of money to begin with.
Right.
Okay, what else happened this week is we had a new high on gold. It reached 4,000. It's actually come back a little bit today, but that was kind of a big headline this week. We actually are seeing the historical peace deal come to play, and obviously the markets, we hit some new highs on some of the indexes. So today is October 9th, and as of yesterday's close, which was October 8th, the Dow Jones was up a little bit from last week. The biggest movers were the NASDAQ and the Russell 2000. The NASDAQ year-to-date is up 19.33, and the Russell 2000, 11.33.
And that Russell 2000 is small cap stocks, and they have not moved for a long time. So this is interesting what's going on now. I think could be very beneficial to those small stocks.
And then we had the S&P 500, not too much of a move, but a little bit of up from last week. Year-to-date, it's up 14.83. But the main thing that's kind of come up with some of these moves in the market are we're still having the conversation on the historical run-up of kind of AI, and obviously looking at, you have bulls and bears. So bulls are those that are very optimistic. You have bears that are, we have bulls that are optimistic, bears that are
pessimistic. They think the stocks are going to go down.
Yeah, and I think the ones that are bears are thinking the valuation's a little high, and obviously those that are bulls are thinking this is just the beginning. There could be some more growth. So, but as you look at the S&P 500, about 25% of the S&P 500 is tied to the Mag 7, which are some of the tech and AI stocks. And so when you see the different indexes moving, just know that you potentially are participating, whether you own individual stocks or exchange-traded funds or mutual funds. But there has definitely been a movement in the AI space.
Yeah, and there are a lot of people who keep talking about that we're overvalued. And although I do think we're stretched, I'm going to tell you that if you're looking out over the next 5 to 10 years, we're just getting started in all of this AI. The big thing was the actual chips themselves, but now it's the use of all this AI that's going to be the next big growth. And it's hard for me to believe that over the next 5 or 10 years, these companies won't be much higher than they are today. That's not to say there won't be a pullback. There could be, but I am definitely not in the camp that says that this is over.
Mm-hmm.
No.
And then we have the Fed watch. So looking at the next Fed meeting isn't going to be till the end of the month, so on October 29th. But recently the numbers, we're looking at about a 94.6% probability of a rate cut. And we've heard between now and the end of the year, there's potentially 2 rate cuts. So that's still something that we're hearing about. Kind of looking at some of the short-term CDs and treasuries. On the short end of the curve, it looks like treasuries now are ahead of CDs a little bit. Right now, a 3-month treasury is 3.96, a 6-month is 3.83, and a 1-year treasury is 3.69.
And mortgage rates have actually come down quite a bit from their highs. They were in the mid-7s, I believe, and now you're probably looking without points at somewhere around 6.1, 6.2. So
Wow.
that's a big drop.
Another thing about the government shutdown and the probability of that rate cut at the end of the month is that with the government shutdown, a lot of this employment data is not going to be really known.
Yeah.
And that's the weak part why they think they need to maybe lower rates some more. Well, inflation is the other side of their mandate, and that seems to be going up, but they're kind of flying blind until we get the government up and running again. So
Well, yeah, but if you talk to businesses out there, they're telling you that things have slowed down a little bit in the economy.
in the employment area,
Yes, in the employment area, and so far, unless you're buying food, it doesn't seem like it's. I mean, I have to tell you, I went to the grocery store yesterday, and I had to buy just a few things, and it came out to be $165. And I'm thinking,
what?
whoa,
where the heck are
What
you
did I buy?
shopping?
Well, things are
Gelson's?
expensive.
Albertsons.
Albertsons, wow.
Yeah,
Wow.
which you think would not be that high, but and it wasn't like extravagant stuff. But
don't think
so
so.
the point is, though, is that food definitely has gone up. Shelter has not. I mean, so far the housing prices have come off a bit, so that's actually down a little bit. But if you talk to the everyday person out there, I think the people who are getting hurt the most, of course, are the people on the bottom.
Absolutely.
The middle okay and the top okay, but those people on the bottom right now are getting hurt.
So over the last couple of weeks, just kind of sharing some things that have come up from a planning perspective. We actually met with a woman recently. It's a prospective client, and she came in, has an IRA account that has 2 concentrated positions in 2 kind of growth stocks, and that her husband had advised her to invest in a while ago. And while those growth stocks have done very well, the reality is, for her age and reducing some of the exposure because she doesn't have a lot of other assets. And so one of the things we're looking at is being a little more diversified. And the hard part is when somebody makes so much money with just a couple stocks, but the reality is those couple stocks we've seen in the past, one or 2 companies, there's a lot of exposure and risk.
What do you mean by the hard part is? What do you mean by
The hard
that?
part is that when you've had something when you tell clients or prospective clients something that's done so well for them, how to really start diversifying and doing other things, because in the long run, something could happen and that could devastate their financial.
All right, so
return.
the hard part is being able to part with some of that.
Yes, that is correct.
It's a good point if you think back to like the dot-com boom, right? How many of the top 10 stocks in '99 are the top 10 stocks today?
Yeah.
One?
Maybe Microsoft.
And-
I don't know if Oracle is one of those, but
Yeah.
but I hate the comparison between now and the dot
Well,
com.
I'm just the point was for diversification.
Yeah.
So that these companies that do very well for a period of time, they don't last forever necessarily. So back to your point as far as trying to get them to diversify, so when those stocks do go down some,
I think it's part of our job is educating and sharing. And she
Right.
seems open. She kind of understands. Look, I get it. I definitely need some help now. But,
Right.
But we've also had other clients. I mean, we had a client that had a concentrated position a few years ago, didn't want to do anything, and then finally said, "You know what? I'm ready. Like, let's do something." And so it's worked out very
Or sometimes it takes a kick in the behind because I know of one person that had a very concentrated position in one stock, and the stock had done great. And, they were advised to diversify, and that stock eventually, and they didn't, and the stock eventually went down by about 70%.
Yeah.
So you got to be careful with just one company. And now, it doesn't matter what the company is.
Yeah.
I think your point, though, is that you can go back 10 years, every 10 years, and the leaders are always change. A couple, maybe 1 or 2 might be the same,
Right.
but most change.
exactly.
So, but I just want to go to something else. You kind of glossed over it a little bit about the peace plan here that's going on in Gaza that was announced either this morning or last night. and today is Thursday the 8th. Right, the 8th?
Today's the 9th.
The 9th,
Yes.
sorry, the
You had
9th.
Thursday right, though.
Yes.
So I was half right. That's what you get. I'm a half-wit. What can I tell you? But, I mean, this is huge.
It is big.
And I actually thought that the stock market would have just gone way up today, and it's actually down.
Mm-hmm.
So sometimes you just don't know, from day to day what's gonna do. But I think this is pretty good because when was the last time you really had peace in the Middle East? It's been I don't know, ever.
Yeah.
I think we've all been waiting for something like this to happen, and it's
Yeah.
probably taken a little longer than we wanted.
It's
but
like 2 years ago
yeah,
they
it's really
started that, right? With the
Well, 2 years ago is when October 7th happened and
Right.
and
Yeah.
the initial aggression started.
It's just amazing when you look at pictures of Gaza too. It's like just
There's nothing
rubble.
left. Yeah, they've taken it down to nothing. So I was listening to somebody this morning, and once this is done, tons of aid is going to come in. Although I think there's a misconception that aid wasn't going in. It actually was in the areas that were not controlled by Hamas.
Right.
But now they're talking about that, and they're talking about putting up housing. It may be temporary housing, I'm not sure, but so people can kind of get back and say, okay, I've got a home again.
Yeah.
So there's a lot of good things that are going to hopefully come out of this. The hostages, whoever is still alive, supposedly are going to be coming back on Monday. And unfortunately, there's also dead hostages that supposedly are going to be returned also. So.
Let's go to a brighter note.
right. And then I see.
But that is actually a bright note.
It is
I
good,
know.
yeah.
Peace.
You're right.
Yeah.
So another thing that's been coming up, it's actually Medicare planning time. So maybe I know, Rachel, you've had some things to share.
I do. I had a client actually come in, an interesting situation this last week where they came in, brought me their W-2s where it showed their health savings account deduction. And I said, I saw their Social Security statement. I said, oh, we went on Social Security as well this year. And so with that was the Medicare. And so I said, you're not eligible anymore to contribute to your health savings account if you are on Medicare. So there are several things that make you ineligible to contribute to a health savings account. And those are if you were not covered by a high deductible health plan, you're not eligible. If you don't have any health coverage, then you're not eligible. And then if you're enrolled in Medicare, you're not eligible. So this was a situation.
If you're not covered by anything, you're not eligible for an HSA?
Correct. Yes. You have to actually be enrolled in a high deductible health plan to be able to contribute to a health savings account.
And so if you were contributing to health savings account and then you switch over to Medicare,
then you can actually contribute to your health savings account up until the time that you enroll in Medicare. But this client didn't even realize that they had been contributing and were on Medicare, and that's a big no-no. And basically what happens is that's then considered an ineligible contribution. And so the question then is, well, what do I do with that contribution? And so I will have to have them contact their HSA administrator. And so if this happened to you, you have to withdraw the excess funds that you put into the account. And this has to happen before the tax deadline. And if you have an extension, the extended due date of your return. Because otherwise, there's a pretty big penalty. I believe it's a 6% excise tax that you pay if you fail to remove those excess contributions before the deadline. So keep in mind, if this happened to you, contact us. We can help you figure out what to do.
say all these little details, just like very
Yeah.
technical, especially if you're used to putting money away and then when you
And they didn't even
change,
realize that would have an impact on them, and they would have to stop that. Question that they asked then after that was, so can I continue to have money in my health savings account after I am on Medicare, and can I spend that? And the answer is yes. And this is a great planning thing that health savings accounts are triple tax advantaged. So you get the tax deduction when you put the money in, it grows tax deferred, comes out tax free, and it rolls over year. So if you don't use all the money, you don't lose it. And there are flexible spending arrangements where if you don't spend the money by the end of the year, you lose that money. So this is a different sort of plan. And so I would encourage you.
Can anyone who's not on those ineligible lists, can they have HSAs?
If they have a high deductible health plan.
Okay, so that's the qualification.
That's kind of the qualification, and not enrolled in Medicare.
Yep.
And you can't be claimed by someone else as a dependent. I think that's it.
I'm trying to be a dependent of someone, but it hasn't worked out yet.
Well, the other thing that I've been thinking about, there are 5 major tax deadlines coming up this next week. Everybody thinks April 15th is the biggest tax deadline of the year, but it's really not, because you can extend the returns at that point, and October 15th is it. So if you don't file your taxes by your individual taxes by October 15th, and if you don't pay the taxes that are owed, there is a 5% late filing penalty, which is in addition to the late filing penalty that you got assessed in April if you
So
didn't
bottom line,
file.
get your taxes in if you haven't.
Yes, exactly.
And those are the taxes owed for 24 or 25?
For 2024,
So
correct.
Rachel's still in
Yes.
2024.
I am a year behind. Yeah. And the other deadlines are if you gifted money and you gifted more than the annual exclusion, which was $18,000 for last year.
Oh, last year, yeah.
Yeah, for
That's
last
right,
year.
I forgot your last year.
I'm still in 2024. Yeah, so you have until October 15th to file your extended U.S. gift tax return. And if you are self-employed, you can still contribute to your SEP IRA or your simple IRA if you are self-employed and or if you're making profit-sharing contributions for 2024. The due date is next week on Wednesday, and or solo 401k profit sharing. And of course, if you were in a disaster zone, October 15th is your deadline as well. So estate planning, so right now the lifetime exemption amount is 13.99%. So if you're looking to reduce your estate to stay under that limit, the 18,000.
Wait, 13.99%.
It's 13.99 million. So,
Million.
thank you.
Yes.
Sorry, I've got tax brain. I'm thinking percentages. So if you're looking to reduce your taxable estate, you can gift up to the annual exclusion amount and not file a gift tax return, which is for 2024 was 18,000. For 2025, it's 19,000. If you gift more than that, you have to file a gift tax return to report the excess amount over
Yeah, but
the annual amount.
so you can give more than that.
Oh, you
It just comes
absolutely-
off of your lifetime.
Exactly.
exemption.
Yes, and it's just an informational
whatever it's
return.
called.
People they kind of get bent out of shape sometimes and think, well, do I have to pay tax on that gift? That's not true.
And I think now getting a little more guidance, because I think at the beginning of the year, everyone was a little nervous on, or is it being sunset or what's going to happen? So I think we at least have some guidelines now.
Yes, exactly.
As far as gifting, like, does it have to be? Can it be to anyone, or does it have to be someone who's related?
It can be to anyone,
Okay.
any one individual per year.
So
Can
I'm
take your
taking any
estate-
donations.
I knew you were
WWF
just kidding.
Financial.
I knew you were going to
Steve
say
Wolff.
that. I knew that was coming.
And this
Wait,
is
don't you have a
setup.
birthday coming up?
I do. I have a birthday coming up in 2 days.
And he's just kidding, just so that
Just kidding.
people don't get mad
I'm
at
not
us.
kidding. No, I am.
Oh, great.
Okay.
Okay.
You know, anyone who didn't know I was kidding right now,
I know. Well, you just never know. I just got to put the disclaimer out there.
We love compliance.
Yes, we do.
All right. Anything else going on that we should know about? All right. Well, this is a wrap for this week. And let's see what happens with the peace plan. Let's see if the government shutdown ends. We've got a lot maybe that's going to go on over the next week. So we'll talk to you next week at this time. And until then, happy investing. Thanks for listening.
Thank you.
Thank you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.